Okay, dear students, let's just start another live revision class. And today's topic is IHT. After that, we will have still two more topic. One is VAT, and the last one is going to be corporation tax. IHT, inheritance tax. Let's see. IHT is charged on the transfer of value of chargeable property by a chargeable person. The basic concept is IHT comes into action only when one individual, that is donor, has given gift to another person. That could be an individual donee, or donee could be a trust. So we'll discuss everything. IHT is charged on the transfer of value of a chargeable property by a chargeable person. Chargeable property, every asset to which the individual is beneficial entitled is called a chargeable asset. Example, like in CGT, for example, father has given cash as gift to his daughter. Cash is an exempt asset in CGT. Under IHT, it is not exempt. Even car is an exempt asset under CGT. It's not exempt in IHT. Chargeable person means an individual who is a domicile in the UK will be liable to IHT on transfer of their worldwide assets, and individuals who is not domicile in the UK will liable to IHT on transfer of their UK asset only. So the simple and straightforward definition of chargeable person could be examined in your multiple choice question. When an individual is domicile, then IHT is applicable on worldwide assets. If that an individual is not UK domicile, then IHT is still applicable, but only on those assets they are given in inheritance in UK. Transfer value, we'll take the value of the estate before transfer, after transfer. Difference is diminish in value, transfer of value. We'll apply this concept, don't worry at all. No, the main concepts are here. When we say types of gift, basically IHT is on gifts. When we say gifts, then there are two possible, you can say, dates. One is gift could be during lifetime. And gifts can be given at death. First of all, lifetime gift. When an individual gift from an individual, one individual to another individual, gift from one individual to another individual during the lifetime, it is a PAT, potentially exempt transfer. During the lifetime, okay, repeat, when PAT arises, when one individual has given gift to another individual, like father has given gift to, let's say, son, daughter, mother has given gift to daughter. So that is PAT, potentially exempt transfer. So when one individual has given gift to another individual during the lifetime, that is PAT. Okay. Now, in case of PAT, there is no lifetime tax. There is no lifetime tax. Number one. Number two, how PAT actually works. For example, we have calculated value of transfer. From that value of transfer, you will deduct annual, exempt amount, post current year. which is 3,000. If previous year annual exempt amount is not used, then last year annual exempt amount. Whatever comes, there will be a gross chargeable amount carry forward. Now, listen carefully. If donor dies within 7 years of making the PAT, then PAT becomes chargeable. If donor dies within 7 years of PAT, then PAT becomes chargeable. And death tax applies. So let me repeat. When one individual has given gift to another individual, I'm talking about father, daughter, father, son, mother, daughter, son, like this. Obviously, if there's a gift between husband and wife, no PAT issues will arise. Both are exempt party for each other. Okay. So when one individual has given gift to another individual during the life, it is PAT. Logically, during the life, there is no tax on PAT. But if donor, the one who has given the gift, if donor dies within 7 years of PAT, then PAT becomes chargeable and logically we apply death tax. Okay. Another point is on death tax, applicable IHT rate is 40%. Another point, if donor dies within 3 years of PAT, within 3 years of gift, then no taper relief. Taper relief is only available on death tax, and taper relief is only applicable when donor dies at least after 3 years of the gift. If donor dies within 3 years of the gift, then no taper relief is available. Actually, what taper relief does, taper relief reduces IST on death tax. But taper relief is only available when donor dies at least after 3 years of making the gift and within 7 years. Another point is very important. What is that? Let's say if you come across a multiple choice question where examiner is asking you when IHT on death will be maximum. The answer is when donor dies, when donor is dead within 3 years of making the gift, then IHT will be maximum. The logic behind that is because no taper relief is available. Okay. Now come back. So during the life, when one individual has given gift to another individual, it is considered as PAT, potentially exempt transfer. No no tax during the lifetime. But the rule says if donor dies within 7 years of making the gift, then PAT becomes chargeable. Okay, now lifetime gift. But this time, let's say individual has given gift to the trust. If this is the case, that individual has given gift to the trust, then it is treated as CLT, chargeable lifetime transfer. Repeat, when individual gives gift to the trust, it is treated as chargeable lifetime transfer, and on chargeable lifetime transfer, there is a tax during the lifetime. So, for example, let's say Mr. Y has given gift to trust, assuming the value of that asset is 400,000. Okay. Number one, it is CLT, chargeable lifetime transfer. So when one individual has given gift to the trust, then it is CLT, chargeable lifetime transfer. Okay. Number one, value of transfer. Let's say it is 400,000. If in the current year annual exempt amount is available, we'll deduct that first. Because always remember one point, you will always solve IHT questions as well as CGT questions in a chronological order. Means, let's say you are solving a question and in the same tax year, individual has given 3 to 4 gifts. So first of all, you have to deal with the gift number 1, then 2, then 3, and then 4. So that is why I'm saying, if current year annual exemption is not utilized, let's say it is the first gift which was given in the current year, then you will deduct annual exempt amount, current year 3,000. If previous year annual exempt amount is available, take that as well, last year. We'll get 394. This 394 is a chargeable amount. Question. Yes, chronological order means date-wise. Perfect. Okay, now. Chargeable amount. Directly on 394, you will not apply any IHT rate during the lifetime. First of all, you will check for the nil rate band, which is 3,25,000. Less last 7 years gross CLT prior to gift. Prior to. This is very important. What we are writing prior to gift. So if you have any gross chargeable lifetime transfer last 7 years prior to this gift, then deduct that. Let's say we do not have. This is the first gift, so 325. Now you will have taxable amount. 394 minus 325. I'm getting 69,000. And now listen carefully. Tax rates, time is lifetime. If donor is paying the tax, then it is 25% during the lifetime. Obviously, IHT during the lifetime will only arise on CLT. On PAT, during the lifetime, there is no tax. If donor pays, then it is 20%. And if nothing is mentioned in the question, students, please reply. Who will pay the tax? If nothing is mentioned, donor is perfect. Nil rate band applicable for 7 years, any amount. I think I've mentioned here, if you please check. Last 7 years, gross CLT prior to gift. Prior to gift. Okay, now nothing is mentioned who pays tax? Donor. Now, let's say nothing is mentioned. IHT 69,000, I'll take 25% of this. IHT is 17,250. Now, a very important point comes. If donor dies within 7 years of CLT, then death tax will apply on CLT. Now there's a question. The question is, sir, we have already paid the tax during the lifetime. I know that. But if donor dies within 7 years, you have to pay the death tax as well. But how it works, I'll show you. First of all, you need to calculate gross chargeable amount carry forward. If donor has paid the tax, question. Yeah, taper relief is only applicable on death tax. Second, taper relief comes only on death tax, plus it only comes when donor dies at least after 3 years of making the gift. Okay, now gross chargeable amount, how will you calculate? First of all, take the chargeable amount, which is 394. Plus, if donor has paid IHT, then we will add the tax. If donor pays, then no need to add tax. Number one, if donor pays, it is 20%. Second, in case of donor, gross chargeable amount carry forward would have been 394 only. But when donor pays, you have to add the tax as well. So 3,94,000 plus 17,250. I'm getting 4,11,250. Now, assuming that donor dies within 7 years of gift. If this is the case, so you have to calculate death tax. I just want to explain. Let's say take this amount. So the gross chargeable amount which was carried forward during the lifetime, now it will become brought forward. Gross chargeable amount brought forward. Okay. Again, you will not apply any tax rate directly on this 41125. Again, you will check for the nil rate band. And again, you have to write less last 7 years gross CLT again prior to gift. Let's say we have nothing. $86,250, that is your taxable amount. Now, IHT on death tax is 40%. IHT is 40%. I'm getting 34,000. You will deduct the taper relief. Percentages of taper relief will be given to you, whatever it comes. But the main concept is taper relief comes into action only when donor at least dies after 3 years of making the gift. Let's say you have calculated the taper relief less IHT paid during the lifetime. IHT paid in lifetime. How much it was paid? 17,250. Final answer will be IHT payable. Very important point is, normally it does not happen, but still let me explain. You will have final answer will be IHT payable. So either there will be a positive value of IHT which you have to pay, or there will be zero. There's no such thing IHT refundable. Mathematically, if it comes, the final answer, mathematically, if it is coming negative, you will treat it like a zero. You will not be getting any refund. So simply, when we are calculating death tax, so either there will be IHT payable, which we have to pay. If mathematically it comes negative, you have to write zero because there is no IHT refundable. Now, come here. Types of gift, lifetime, IHT on lifetime gifts. So we have seen when one individual gives gift to another, then it is PAT, no tax on PAT during the lifetime. Student, can you quickly reply when PAT becomes chargeable? Please give me the answer. What is the answer when PAT becomes chargeable? If donor dies within 7 years. Great. That's great. Death IHT on lifetime gifts and the death IHT on death estate. Another gift is gift on death, which is death estate. Death estate simply means net assets of the deceased person. Let's see. Lifetime IHT on lifetime gifts. It includes transfer between individual other than what? Students, quickly reply why we are not taking spouses here. Can I say transfer between spouses is exempt within IHT? Transfer value? Transfer value? less if you have any reliefs. Basically, let's say simply annual exempt amount. Then exemptions. It could be marriage exemptions. Okay. Finally, you will have chargeable amount. Now, transfer value relief exemption. It includes transfer of to trust as well. Chargeable lifetime transfers. Transfer value relief exemption, chargeable amount, calculate unused nil rate band of the tax year. We have discussed that. Donor pays 25% when donee pays 20. When do we add? When we do not add? We have discussed that. Now, this is a little bit important for multiple choice question, I would say. Gift between spouses. Any transfer of value between spouses are exempt. However, if the spouse receiving the gift is non-UK domicile, a limit of 3,25,000 is applied and any excess amount is chargeable to IHT. Very important, I would say, for a multiple choice question. Because the normal understanding is transfer of assets between spouses, they are exempt. But the rule says if the spouse receiving the gift is non-UK domicile, a limit is 325. Any amount which is excess than 325, that is chargeable. However, non-UK domicile individual whose spouse is UK domicile can elect to treat as UK domicile through election to HMRC. Now, it is possible the other spouse who is UK domicile can go for the election of that treat my spouse as UK domicile. Then the limit of 325 will not apply, but there is one problem. The problem is when non-UK domicile spouse is also treated like UK domicile, then IHT will arise on worldwide assets. Annual exemption is 3,000 available for lifetime transfers available on both PAT and CLT. Look at this chronological order. You can say the date wise. Unused annual exempt amount can be carried forward for 1 year only, but annual exempt of the current year must be used first, then brought forward. It is beneficial to make CLT before PAT because if you're doing PAT first, you're using annual exempt amount. And on the other hand, there's no tax on PAT. So it's just a tax planning. Better to go for first CLT as gift than PAT. Annual exemption. Okay, question. So we deduct unused nil rate band both lifetime. Yes. Actually, please, you people need to understand one thing. There are two different events. They're not the same. Look at this. Let's say this is the first gift, and during the lifetime, I have utilized nil rate band. Okay. Now the person is dead within 7 years. So what are we doing? Again, we are writing 325. The same thing. Last 7 years gross CLT prior to again gift. Prior to gift. So in each time you have to compare prior to the gift. Now, for example, let's say if there was a second gift as well, assuming in the same question, assuming there was a second gift also. It is just a first gift, okay? Let's say on the first gift, we have calculated lifetime tax as well as death tax, assuming there was a second gift as well to the trust. Let's say it was cash 3 lakh. Number one, in the same year, in the same tax year, the second gift was given as cash. Annual exempt amount, current year, not applicable. Why? It was used by the first gift in the same year. Last year, not applicable. Why? It is used by the first gift. Now, I'll get 3 lakh straight chargeable. Keep watching. Okay. Now, nil rate band again. 325 less gross CLT prior to gift. Prior to gift in last 7 years. Can I say now? We do have a gross CLT prior to this gift. And the amount of that gross CLT is this. 411250. Look at this. So now we are not getting any nil rate band on the second gift. The entire 300 becomes taxable. If donor is paying the tax, let's say again it will be 25%. 75,000. Again we have to calculate gross chargeable lifetime transfer carry forward. It will become 3 lakh plus 75,000. Now, if the donor is dead within 7 years of the second gift as well, again what happens? Death tax will come. Can I say gross CLT now brought forward? 375. Look at this. Again, I'm writing nil rate band 325 less last 7 years gross CLT prior to gift, which we have. I'm not getting anything. 375. IHT will be 40%. 1,50,000. We'll check for the taper relief. If donor is dead after 3 years of making the gift, we'll get the taper relief less lifetime tax paid. Is this clear now? How to use this nil rate band? Now you can see on the second gift, I did not get any nil rate band during the lifetime as well as on death tax because it was already utilized by the first gift. I hope now it should be clear. Okay. Normal exemption out of income. A transferred value is exempt if made as a part of person's normal expenditure out of income. For example, like parents, they are paying their children's school fee. That is exempt under IHT because it does not affect the donor's standard of living. So when normal expenditures are incurred by the donor, which is not affecting their living standard, then such expenditures are exempt in IHT. Small gift exemption. Transfer of asset having value less than equal to 250 per recipient per tax year are exempt. If exceeds, then the whole amount becomes what? Taxable. Now there is something very important. What it says, transfer of assets, okay? Having value less than equal to 250 per recipient per tax year is exempt. If it exceeds, the entire amount becomes taxable. But now listen to me carefully. If your examiner says that Mr. Y is paying their children fee, let's assume £300 per month. Even it is £300, I'll take it as an exempt expenditure because I'll say that it is a normal expenditure which is made regularly and it is not affecting the living standard of the donor. So you have to please read the question nicely. £300 father is not giving as gift to his daughter or son. Father is paying school fee. Here we are saying transfer of assets having value less than equal to 250, that is exempt. But if there is a routine expenditure and value is small, it is not affecting the living standard of the donor, then again that is also exempt. Gift on marriages, student, you have to memorize this, okay? £5,000 by parent, each parent. 2,500 if remote ancestor or grandparents, mainly the grandparents, remoter ancestors or grandparents. Basically, again, this 2,500 is from each. We are talking about grandfather and let's say mother. 2,500 if from a party to marriage or civil partner. Again, this is 2,500 for each. Husband to wife, wife to husband. £1,000 if from any other person. So please try to memorize these marriage gift exemption amounts. Due date of payment of IHT, this is also important. For lifetime CLT, the due date depends upon the date of gift. Date of CLT. If the date is within 6 April to 30th September, then tax is paid on 30th April for the next calendar year. 30th April for the next calendar years. So if CLT is made between 6 April to 30th September, due date is 30th April of the next calendar year. If it is between 1st October to 5th April, then 6 months after the end of the month of the transfer. For example, your examiner says that gift was given on 1st December 24. Student, the gift was given on 1st December 24. Can you tell me when will you pay the tax? What will be the tax payment date? The gift was made on 1st December 24. I need to know the gift. I need to know due date of tax payment. Please answer, students. What is the answer, please? Students, I'm waiting. If the gift was made on 1st December 24, so what will be the due date? Where is everyone? Or I'm the only one? Yes, it will be 30th June. Perfect. Death time we have already discussed. Taper relief is there. If donor dies within 3 years, 0. After 3, but before 4, 20, then 40, 60, and 80. Death IHT on lifetime gift is always paid by recipient of gift, trustees of the trust if CLT, and donee if PAT. Death estate is a really big format of death estate, make it very easy. Basically, death estate means when an individual is dead, you have to calculate death tax on death estate. Death estate means simply you need to know the value of net assets which individual has left. For example, freehold property less any mortgages. If there's a lease property, if there are businesses, if there are shares, add within the shares value, you need to add the next dividend as well. If they are debentures, add the interest as well. If they are chattels, take that as well. Insurance policy proceeds, if there are any insurance policies, cash bank deposit, take everything. Allowable deduction, funeral expenses, legally enforceable debts, if there are any debts, you have to deduct that. For example, outstanding taxes, income tax, CGT, NIC, which individual has not paid, deduct that. Deduct to exempt legacies like spouse, civil partner, charity, political party. If the deceased person has left something for spouse, civil partners, charity, political parties, that will be deducted because they are exempt parties. After that, you will get gross chargeable estate. And look at this. Again, we will see nil rate band. Again, a normal nil rate band, 3,25,000 will apply here as well. But just one clarity. In case of death estate, when we go for nil rate band, 325. Now I deduct, then how will you write less? Last 7 years, gross CLT. This time I'm going to write prior to death. This is important. When we are calculating death, tax on death estate, you will still get the nil rate band, but this time you will check last 7 year gross CLT. This time you will be writing prior to death. There are two occasions in which we write last 7 years prior to gift. One is lifetime tax, and another is death tax. But when we are calculating IHT on death estate, then you have to write and you have to check last 7 year gross CLT prior to death. Nil rate band. Okay, look at this. Last gross chargeable PAT CLT previous 7 year prior to death. IHT rate is 40%. No taper relief is available. Now, this is cost of administration is paid by executor is not an allowable expense. It is incurred after the death. This is very important. It comes in a multiple choice questions. If there is any cost which is incurred by the administrator, just a minute. Okay. So any cost of administrating the estate by executor is not an allowable expense. There's a logic behind that because that cost is incurred after the death. Okay, on death estate, there's one more nil rate band, that is residency nil rate band, 1,75,000. It is an additional 1,75,000 nil rate band only available in the death of an individual. It is available if death estate of a deceased person includes main residence which is inherited by the direct descendants. Direct descendant means children and grandchildren. This is very important. When the main residence is left for the direct descendants, then residence nil rate band of 1,75,000 will be available. And who comes in direct descendants? Children and grandchildren. Because once there was a multiple choice question where, let's say, the deceased person has left the main residence for his cousin, and his students, they were asking, sir, why residence nil rate band is not available? Because it is not available. Why? Cousins, they are not coming in direct descendants. Okay. Who comes in direct descendants? Children and the grandchildren. Value of residence is calculated after deducting a repayment mortgage. Now, this is another important concept. If there is any mortgage on that property, then you have to deduct that mortgage. Or interest only mortgage. However, if the value of residence is below 175, then residence nil rate band is reduced to the value. For example, assuming the value of the property is 200,000, but there is a mortgage value of 80,000 on that residence. So after deducting the mortgage, the value comes 120. So now you will not get the residence nil rate band 175, you will be getting 120. For example, value of residence is 80, then you will get 80,000. Any other type of property, such as property which has been let out, does not qualify for the residence nil rate band. Due dates of payment of death, IHT simply 6 months after the month of death. There is one more final concept. Transfer of unused nil rate band. If any partner in the spouse dies with unused nil rate band, then the other partner may claim to increase his or her nil rate band by the percentage of unused nil rate band of the deceased person. Assuming, just an assumption, if your examiner says that, let's say, the first spouse when died, that spouse only used 70% of the nil rate band. It's okay. So when it comes to the death of the second spouse will get their normal nil rate band of 3,25,000 plus additional 30%, because first spouse utilized 70%. So how much it was not used? 30%. So students, in a very short period of time, I have covered all the main concepts of IHT. And previously we covered CGT. Now we are left with two topics. One is VAT and another is corporation tax. But before that, we have 2 minutes to end the class. I want to know, what is your status? Have you people seen all the classes? Quickly reply, please. And second question is, please share your queries with me regarding any MCQs, any long question which is disturbing you, which is really disturbing you, okay? So we can discuss those questions, those queries in a live revision class. I will try my best to take both topic classes, if not in this week, but definitely in a coming week, we will complete the revision, VAT and the corporation tax. But I'll try to manage a class tomorrow, otherwise day after tomorrow. I will try my best. But please try to complete the lectures and share your queries with me. So last minute, is there anything you want to please share? You can quickly let me know. Is there anything?